regulatory regime. And Catherine, there's been a lot of buzz, we've heard it already this morning, about the Jobs Act, particularly Titles 2 and 4, excuse me, not 2 and 4, but 3 and 4. Could you give us a high overview of each of the regulations, who's using it, right? What industries are taking advantage of these new regulations, and what kind of activity has transpired since their effective date?
Okay, so first of all, as the lawyer, I walk in a lot of times when I work with companies, and I have to deal with the world that we live in right now. So a company I'm used to, companies come in, they want to raise capital. You either do it privately because you know some people or you know some venture capitalists, or you are a company that has been meeting with investment bankers and you want to go public because it's going to create incredible liquidity and you're going to be able to trade and then you're going to be able to leverage that. And now though we're in a situation where it's kind of a hybrid. Okay, and remember, you could never do, and the big thing about these is that you could never do in our world what's called general solicitation. We used to, as lawyers, would just wrap our minds around people say, well, if I go to this conference and I do this, and oh no, that could be deemed general solicitation, we'd all get wound up. Now, this was a huge deal for us with crowdfunding and Regulation A, because your hands aren't tied. But it doesn't mean that the floodgates are going to open. All you have to do is post something on a web page and money's going to come rolling in. So what you need to do is you need to be able to look at, where you can fit. So right now this is just the two options, and there's a way more recent option that Jenny's going to talk about as well. The crowdfunding and Regulation A. And Regulation A is called the mini IPO. And you have to look at, well, if I do the mini IPO and I can do the general solicitation, that would be great, but remember, you can do testing the waters. Testing the waters means that you can go out and say, so if I wanted to sell some equity in my company, and this is what my company does, would you be interested? Would you be interested? And it's easy for people to say yes. Remember, Mark said he had a company that got $10 million worth of interest, and they sold $200,000 and $250,000 worth of securities. That is our experience. And you don't have, under the traditional, unlike the traditional model, you don't necessarily have an investment banker who's out there who is going to do a quote-unquote roadshow, and you're going to go out and you're going to have all these personal meetings and you're going to create a book and you're going to sell your securities. It's a different paradigm. In both of these scenarios, and as they've mentioned in the previous panel, it's true. You have to be P.T. Barnum yourself. You have to figure out, hey, again, just because you can put something on the internet doesn't mean that the money is going to come flowing in. You need to figure out, you're going to have to be the investment banker, the marketer, the investor relations. What's your company's story? How are you going to sell it? What's your potential market? So when you look at these two models, okay, so for example, let's start with crowdfunding. Crowdfunding, you have a limit of up to $1 million in a 12-month period. Is that going to be enough for your business? How then are you going to sell it? Well, here under crowdfunding, you have to do it through a portal, and then there's a whole bunch of, you can get a whole bunch of small investors, which is great, and there's limitations you need to understand. You still have to have certain disclosures, okay, because we want to have a balance. We want to have a balance that people understand. Remember, you're going to be part of educating your investors. I think that's part of the balance of what you do with us lawyers and putting the information out. So you have to have a balance between the marketing fluff that companies are great at, but also the information that is going to give investors comfort that you know what you're talking about, you know where you are in the industry, you know what keeps you up at night, and they say, okay, this person, this company, they have a plan, and they know, and of course, we're all going to put everywhere, this is a risky investment as well, but there's going to be a marketing and what you put out there, and it's going to be your story. And we want to make sure that the information and disclosures out there. Now, for the general solicitation part, now with crowdfunding, you have to do it on a particular platform, okay? So you also want to make sure that you understand what that platform brings to the table as well. And platforms have to be registered. Now, Reg A, you say, well, Reg A may be a better option for me because I can put it on my website and I can tell people, hey, I'm raising equity capital and I can do. And so you want to balance what it is, but if you do Reg A, you could be, depending on how much money you raise, you're going to be subject to more disclosure requirements. And so how much time do you want to do? And there's also the difference of the costs. the specialists that you come in to kind of help you put this all together as well. You want to balance it, okay? So if we go look at, so this is all the fun kind of regulatory stuff. So let's look at kind of the reality of it, all right? What we've seen so far. So crowdfunding hasn't even really been around for a year. Reg A has been around for over a year, and so it has more development and more companies that have raised more money. And crowdfunding is really being used as companies, and you're going to hear this a lot, that are consumer-facing companies because they have a natural affinity group that is going to go through it. So right now there have been really the successful offerings that people have talked about is those that have been able to raise $1 million, because that's your cap. Those have been the success. There have been 3. Hops and Grain, a brewery company, Beta Bionics, which is interesting because you would say, well, that wouldn't fit in the model. And so I think it's because they told their story well, and they were able to get it. Remember, as Mona was saying, you have a disconnect between investors who maybe don't have all the information and they don't know how to invest, and then you have companies that are seeking capital, but they're not having maybe all the disclosure around.